Hello everyone, my name is Vaibhav Puranik and welcome to you all from sunny California. Today I'm going to talk about 10 steps that a passive investor goes through in order to invest in a multifamily syndication. And there's a lot here, right? And there's a lot of onus is on the investor itself because finally it's their hard-earned money, and if they don't do your due diligence right, then they are likely to lose their money, right? So let's go through one by one these 10 steps and understand them in a little bit more detail. So number one is when you're approaching a syndicator or a particular offering of a syndicator, first understand whether it's a fund or a property that's identified already. Now that's very basic to understand. If you attend the call, you will probably understand that in first 5 seconds, right? They will clearly give you address, the property, or they'll tell you that this is a fund that they're raising to buy multiple properties or one property or whatever, right? Easy enough. Second step is to understand their profit sharing model. So there are all sorts of fees tacked on, like asset management fee, acquisition fee, disposition fee, and there is profit sharing model that it could be tiered model. For example, they'll take 20%, the operator will take 20% of the profits, or the operator will take 20% up to certain percentage of profit, and then after that it'll be a different revenue share or profit split, right? So you need to understand all of that so that you clearly know what you're getting and what the operators are getting, right? There has to be a clarity about this, otherwise you can't proceed. The third thing is, now this operator will tell you some sort of projections, right? Even if it is fund, they will say we are targeting whatever 20% return, 15% return, 10% return, whatever it could be, right? Based on how aggressive it is. Now where did they come to that number from is very important. Like what are the rent projections, right? If there's a specific property, right, are they assuming a specific rent growth percentage? Is that a normal to assume that rent growth percentage for that particular region? Or what is their cap rate for selling, right? Are they assuming whether the cap rate is going up or cap rate is going down? If they're assuming cap rate is going down, then it's a problem. Yeah. What kind of financing, right? How much is bank putting, how much you're putting, right? I mean, the investors are putting. So you need to understand the capital stack, essentially. Now the fourth step is, if it's a property, then your due diligence has to be focused on the property itself as well. For example, location of the property, class of the property, what do they plan to do, what is their business plan, right? All of that kind of stuff. Fifth one is, it is very important to understand whether the person that's talking to you is just a fundraiser or also a fundraiser and operator. I think there is more due diligence required for the operator, because it's the operator that's going to take care of the property for 4 or 5 years and then give you returns, right? So a lot depends on the operator, not just the fundraisers can raise the funds and go away, right? So it's very important that you do your due diligence on the operator. Google them, find out their track record. Number 6, once you move forward, all of this due diligence is done and you're satisfied and you decided to move forward, right? Then you need to give your written commitment to this syndicator and understand the timelines for transferring the money, documentation, all that stuff. Number 7 is you will have to probably upload your tax returns to a third party so that they can verify your accreditation status. Now these laws are always changing, so I don't know if it, depending on when you're watching the video, this may or may not be true. There's also 506B. If there's somebody you closely know, then they might not ask for this. So, but in most likely that they will ask you to upload your tax returns and documents to a third party so that third party can verify whether you are an accredited investor or not. This is absolutely common. Don't get surprised if a syndicator operator asks you to do that. Now reviewing documentation, number 8, right, is the first thing that you need to view is the PPM. And in the initial presentation, they must have told you a lot of things. And are those the same things in the PPM as well, right? Verify that. Sometimes PPM is given to you well in advance as well, so it depends when you got the PPM, right? But if you just attended a call first and then PPM you got the PPM later, then make sure that the PPM or private placement memorandum has the same information as they told you earlier, right? Number 9 is operating agreement of this LLC. Sometimes it's LLC, sometimes it could be other entity as well, but if it's most likely it will be an LLC. So look at the operating agreement of the LLC, right? And then ask questions if you don't understand something. Maybe even check out with some other previous syndications, right? If you have invested in art, right? Just do your due diligence here, right? And number 10 is easy, is sign the documents and wire the money. Now, make sure you verify your wire information, okay? Because once the money leaves your bank account, if it does not go into the right account, then the money is gone, essentially. So it is very important that you call the operators, the syndicator, and verify the information that you are wiring to. You make a mistake there, you're going to lose your money. So be very careful about it, okay? And that's it. After that, you do nothing. You just sit back and collect your annual dividends, or just watch your money grow for the next few years. There's a lot of interesting information like this on our website, oldmoneycapital.com, and also our Instagram handle is oldmoneycapital123. Thank you very much, and I'll see you again in some other video.